You're welcome to Mufasa Trading Academy. Today we're talking about, I'll be teaching you to spot out fair value gap on our chart. Now the question is, what are fair value gaps? Fair value gaps are inefficiencies that happens in price. What did I say? They are inefficiencies that happen in what? In price. Price returns back to fair value gap, either to the open of the fair value gap or the close of the fair value gap, or the consequence encouragement of the fair value gap, and it uses that place as what? As either support, or as entries, or as either resistance, or what? As entries in price. So now, what am I saying? Let me give us what a typical fair value gap looks like. Now, fair value gap, an example of a fair value gap is this. If you check, a typical example of a fair value gap is this. I'm taking order, it very easy for us. A typical example of a fair value gap is this. This is a fair value gap. This black candle you're seeing. This black candle you're seeing, this very a fair value gap. That is an example of what? A fair value gap. Why is it called a fair value gap? Because price is lagging from this open of this blue candle and the high of this blue candle. That is the low of this blue candle and the high of this black candle. Price, there's an inefficiency in price. That means this long down candle coming downward is called an inefficiency. So on a 4-hour chart. So what are we talking about here? Now if you check, price rate had to go back into this inefficiency, this fair value gap. Now let's see. Price returned back into the fair value gap. Trying to do what? Trying to cause an entry. Printing from where? You see, price returned back into the fair value gap. Price returned back into the fair value gap. So here is called what? A fair value gap. Now let's proceed. Let's check for other fair value gap in price action. Let's check for other fair value gap in what? In price action. So I want to give us another example of a fair value gap. This is a sell. This candle here is a sell side imbalance, buy side inefficiency, also known as what? A fair value gap. That is, price is lacking what? Buy side. That's why price ought to go down, go back into what? That is, price had to go back and fill the fair value gap. As if we are drawing our box, or rectangular box, we draw like this. Price has been returning back into the fair value gap. If you can see, price has been returning back into the fair value gap. So it's written here, fair value gap is an inefficiency in price delivery. So another example of a fair value gap is what? Another example of a fair value gap is what? This high of this blue candle, the high of this blue candle, and the low of this black candle. It's another fair value gap. Price left us with this inefficiency here, this blue candle. So can you see for yourself? There's an inefficiency there in price delivery. I don't know if we can see, but I believe we can. So an inefficiency. I'm coming. Let me change the color. Trying to add the color effect and make it more opaque. Trying to add more color. Okay. So I believe we can now see this other color. This is another fair value gap. You see, this is what A bullish fair value gap. A bullish fair value gap. Why is it called a bullish fair value gap? It's called a bullish fair value gap because price le- price gave us what deliver to the upside and now left this place open. So this is a bullish candle, and that's why I can call or classify this one as my bullish what fair value gap. So price entered back into the fair value gap, into the open of the eye of this previous candle. Price burst into it with this blue candle, balancing this fair value gap, filling this inefficiency, returning back upward, came downward, still inside the fair value gap. So if you check, see something, price did something wonderful here. Price went higher, leaving us with a fair value gap and inefficiency here in price delivery. Price closed bearish here, opened upward, went downward, dug into it, still went above again the fair value gap. Are you seeing with your eyes? Now see, price went downward, it's still inside it. It never just went down below the fair value gap. It filled the fair value gap with this blue candle. Price, this is how wonderful price is. Price dug into it. If you check, see something, this black candle all reside around this consequence encouragement or the middle of what the bullish fair value gap. So now if you check, price went downwards, still printing inside the fair value gap. Now price went lower, that doesn't mean that it left the fair value gap. Every other candle still was still residing inside the fair value gap. So the wick does the damage. Listen to what I'm saying. The wick, this wick did the damage, and what happened? The body tells the story. The wig does the damage, the body tells the story. You only one day you find out that the wig indeed, the reason I say the wig does the damage, the body tells the story. This is the wig I'm talking about. Did the damage while the body does what? Tells us the story. So this is how to use fair value gap. Now, how to use fair value gap on our chart is what we should look after now. How to use fair value gap on our chart. We should still leave this other fair value gap in here. Now, another good question is, you've now known how to pinpoint a fair value gap on chart. Now the question is, how do we use fair value gap to execute trade, to make entries, and also to make sure that we are the right side of the market? This is a fair value gap. Let me expand the chart so you can see very clear. Before I go for that one, let's talk about this one here. What appears as one candle on a 4 hour, one big candle. This is what I mean. What appears as just one big candle on a 4 hour, this very candle. On a 1 hour, how many candles are we seeing there? Let's count. Two big candles. That doesn't mean this candle is not part of it. And this one. This is one, this two, this is 3, and this is 4. So on a 1 hour, we are seeing two big candles there. So what are those candles telling us? We are still inside our higher time frame what fair value gap. So let's check it out now. The importance of fair value gap and how to use them is what we're talking about now. How do you use a fair value gap? Now you will now know how to identify fair value gap on chart. But now the question is, how do we apply fair value gap and how do we use it in chart to make entries? Mind you, this is just an educational content. It's just an educational content and nothing more. So if you would like to be mentored by you would like to be mentored, our academy is open live. We host live classes from Mondays to Fridays. Our office is here in Abuja. I'll be dropping the address after this class. You can also DM me so as for me to guide you on how to reach us. We have our online class happening every we post signals there on Telegram. We talk to people, we encourage traders, we teach them, we make them understand the reason why they must excel in this market. Now, let's continue. So this is a fair value gap. It's a typical example of a what? Of a sell side fair value gap. This is a sell side fair value gap. That is what am I saying? This is a bearish fair value gap. A bearish what? Fair value gap. Why do I call it a bearish fair value gap? Because I'm picking this very place. This black candle is what? Is a bearish mark. Is a bearish candle. This very black candle is a bearish candle. Bearish candle, am I correct? Yes, it's a very what? It's called what? A bearish candle. Reason why it's a bearish candle is because when we are buying, it's called bullish. When we are going downward or selling downward, it's called bearish. So now, this is a bearish fair value gap. Price went higher, higher, higher. Went to the fair value gap, dug lower, gave us another fair value gap in here. Mind you, the body tells the story. The wick does the what? The wick does the damage. Went downward, gave us another fair value gap here. And that's how. So what kind of fair value gap is this? The sell side slash sell slash bearish fair value gap. So whenever we are placing our trade, this is how we place our trade, expecting it that when price reaches for this level, it should refill our entry and seek sell side. Mind you, in every trade you place, every trade you try to place, always put a stop loss, because this market is volatile. Some things influences this market and not just these technicals. So